Hello and welcome to the Capital Gains Tax Solutions Podcast, also streaming on Expert CRE Secrets, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, real estate, business, save a failed 1031 exchange, so you can create and preserve more wealth by deferring millions of dollars of capital gains tax. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, crypto business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm so excited about our next guest. I had the privilege to meet her in person at the best ever real estate conference last week. And she is a part of passiveinvesting.com with an amazing gentleman named Dan Hanford, who's one of our strategic alliances. And she's here to share and drop some knowledge with us when it comes to making all things passive commercial real estate investing made simple. In fact, she, the beginning of her real estate career, went better than most, but her first ever rental in 2002 was a huge success. It was on the second deal that she almost lost it all. She's going to tell us that story and so much more. Please welcome to the show with me, Whitney Elkins-Hutten. Whitney, how you doing?
I'm doing great. Thanks so much for having me on. This is amazing.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, definitely. So my current focus is on passive real estate investing. But I started off on the active side in 2002. I started off as a, accidental landlord. I bought a house with a significant other. And, fast forward about a month into owning the house, the relationship fell apart. And here I had a house, all the expenses related to the house, and the house needed a pretty intensive rehab. I didn't know what to do. So I stuffed it full of roommates. And, back then in 2002, YouTube wasn't around. So I went to Home Depot and bought the Home Depot 1, 2, 3 book and taught myself everything about repairing a house, drywall, electrical, plumbing, which, by the way, you shouldn't do all of that. Hire the experts. Anyways, fast forward 11 months later, a lot of dinners bought for my friends to help, to get them to help me repair the house. I sold the house for $52,000 profit. And then I realized I hadn't been paying for any of the expenses the entire time. And so I was like, ding, ding, how many more of these projects could I possibly do? Really to help me unlock my golden handcuffs for my day job. Now, as you already alluded to, the second project didn't go so well, and we can dive into that story here in a minute. But it took a few years doing what we call live-in flipping and house hacking, utilizing the 121 exclusion to keep a lot of those profits tax-free, and playing a little bit of Monopoly and moving up into larger and larger deals, that my husband and I realized, oh, we actually should keep some of these properties, rent them out, and have people pay us rent every month. That's how we're going to actually be able to step away from our day jobs. And we scaled a portfolio of over 30 single family rentals, doing about 10 flips a year as well on the side. And then we had a baby girl. And I also had some family members that were ill as well. And I wanted to just spend more time with them. And that's when I decided I wanted to walk away from my job, but my husband wanted the same thing too. And it was just like, we just couldn't see a path for us to go to 80 properties. I mean, even though technically, according to the IRS, that income's passive, it was anything but passive, like on our time. And so that's when we really started taking a look at how could we acquire more units with each transaction. And that's when we stumbled across commercial passive real estate investing, syndications, and investing in funds. And once we, kind of dove into that, I mean, we just blew the doors off of scaling our portfolio, but also our time freedom, which is so important, and probably just as important as trying to limit your tax bill.
Phenomenal, Whitney. And by the way, you can learn more about Whitney. Go by going to passiveinvestingwithwhitney.com. That's passiveinvestingwithwhitney.com. Before we dive into the top secrets to making this passive commercial real estate investing simple, I want to take one other step back, Whitney. You see, I believe you've all been given certain gifts in this life. And I want you to go back to your high school days. maybe when it was you're working in the medical field, right? And some people call these strengths, some people call them superpowers. I believe they've been given to us to be a blessing, help to others. So I'm curious, what are those one or two strengths that you believe you were given, and how does it help how you help and bless people today?
Well, I actually want to kind of like break that down a little bit further, right? Because I think we all have our strengths, right? Things that we are, trained on the job that we get really good at. Do we love them? I don't know. Maybe, maybe not. But I think somewhere buried in there, we realize what our gifts are. And over time, because, as you alluded to, I was in the medical field for a while, specifically in public health. I was running large research studies. And when you're coordinating these larger studies over, maybe like a metropolitan service area or even across an entire state, complexity is the enemy of execution. So my superpower, what I believe is my superpower, and others have told me and shared with me as well, is being able to take complexity and strip out a complex topic and break it down into its simple terms so we can get right into execution.
Beautiful. Making the complex simple so that you can execute. Fantastic. So with that in mind, let's dive right into the topic at hand, which is passive commercial real estate made simple. So Whitney, what's the biggest secret, or the number one secret to making passive commercial real estate simple?
Well, the first step is actually knowing what your goals are. What is it you're trying to achieve? And oftentimes I've been on the phone with thousands of investors, and they're primarily chasing yield. They want to get out of the stock market. They have a pain. They want to transition into some sort of like alternative strategy. Or maybe they do already believe in real estate, but they haven't really quite nailed down what exactly they need. What are their goals? And sometimes it's actually what they don't realize what they need with their investing goals that trips them up. For example, this is a conversation I have all the time. An investor comes in, they're like, I want out of the stock market. It's too volatile for me. And I'm like, great. Do you need cash flow? Do you need gains? Do you need some sort of balanced blend of both with your real estate asset? And they'll be like, oh, I don't need the cash flow right now. Just sign me up for the gains. They're already thinking like kind of like a retirement plan. I'm going to use this 30, 40 years down the line. And I'm like, okay, what happens if you lose your job tomorrow? What are you going to do? Or maybe you have to downsize, or maybe you grow your family and you actually realize you want to take a step back. I always encourage people to, again, look at their goals. What is it they want? Why do they want it? But also make sure that somewhere in that investment plan there is cash flow, because it indicates that there's actually that asset you're investing in has stabilized now and is performing in the current environment.
Got it. So I get that. So clarifying your goals and your vision for your investing, or what you're trying to do, what you're trying to accomplish, and right next to that, or side by side, is actually clarifying your cash flow needs and taking into consideration like worst case scenarios. Hey, I might lose my job. Things might get, someone might want to stay home full time to be a mom or your dad or whatever, to travel more. Like clarifying what is your actual cash flow needs. Is that a fair summary for secret number one?
Yes, definitely. And then when we start diving, we can kind of roll right into secret number two, which is, understanding what your actual risk tolerance is. So many people, like in today's market, I mean, I just did a talk a couple of weeks ago, and when I was about multi-generational wealth, you and I spoke about it at IIRC as well. A lot of people were trained to pay taxes. We're trained to go out and get a good education, get a good high-paying job, buy the house, take the standard deduction, and oh yeah, by the way, contribute to your 401k. There's so many different ways that we can actually reduce our tax bill here, but before we even get to that tax bill, we have to understand how is it we're currently investing, and is that actually the lowest risk type of investment we could take for ourselves. Now, if you're investing in stocks, bonds, and mutual funds, great. But when we move over to real estate investing, we can't take the same mentality with us. We have to actually understand what are the type of assets that are available to us. A lot of people come out of stocks, bond, and mutual fund investing and are chasing yield. Give me the highest returns. I'll take the cash flow later. Well, potentially that is one of the higher risk investments you could possibly make. in the real estate sector. So I really try to help people understand, are you looking for Class A suburban housing, low deferred maintenance, low capital expenditures on the project, but you get a nice high quality tenant and you can kind of, what we call clip a coupon and, take that cash flow now, get nice equity bumps later? Or are you looking for more of a, on the opposite side of the spectrum, a development deal where it's ground up and you have a lot of potential risk with what we call entitlement, getting all the permitting to be able to convert the land into the highest best use. And then also building the actual project. We've got supply, risks that are coming into the business plan. We have labor risks that are coming into the business plan. And then if you're going into like a residential project, hey, just tenanting the project. How do you get it all tenanted? So there's a place for all of those projects potentially in someone's portfolio, but what I really try to encourage them to look at, like based on what your goals are and what your needs, let's make sure that your risk tolerance is matching with those before we start like taking a look at operators.
Perfect. Okay, so number one is clarify your goals and cash flow needs. Number two is what is your risk tolerance and how do you properly diversify perhaps based upon that risk tolerance, right? Understanding the different options and perhaps not over concentrating to a single asset type or a single product type or a single location, and really clarifying that. And then what's step number three or secret number three?
Well, vetting the operator, right? The operator is the business plan. Okay. I talked to a lot of investors. I actually just got off the phone with one right before we hit record on the podcast. She has 32 properties. Fantastic. And she's like, okay, tell me what your returns are on your commercial deals. And I'm like, whoa, hold on. Like, let's date a little bit. Let's get to know each other. And that's exactly what investors should be doing is, it's a different type of mentality. We're in the market. You're chasing yield here, in a private equity investing. You can also chase yield on the deal, but you want to know who the jockey is riding the horse, not betting on the horse. And so really secret number three is learning how to vet an operator that, intently. Okay, case in point. You identified your goals, you identified your risk tolerance. Now you start going online or going to real estate conference or networking with other investors to get a Rolodex of operators to interview. You gotta hop on the phone with them and actually get to know them, right? You have to, understand, build that level of trust, and it goes both directions. Who are they? Like, have they been in real estate for a long time? What is their track record? Have they had any exits? How have the exits performed on the properties? Who is on their team? Okay, if they're a solo operator, for me, that's a red flag. I want somebody taking care of my money like it's my money. Okay, so I want them watching over it full time. Okay, then we can dive into like, what is their actual philosophy? Or, again, we call it business alignment, is what their investment strategy is and the type of asset they're going after actually aligned with what your risk tolerance is and your investing goals. Okay.
Fantastic. That's great. Yeah. Let me encapsulate that because that's really big. So it's vetting the operator, right? So I like the way you put that the operator is the business plan, and it's not just betting on like the horse, like what's the yield, what's the return. It's who is right, who is operating, who's riding that horse, right? But bet on the jockey. And I know Dan Hanford, he did a talk, and we're at the Best Ever Conference with Joe Fairless, and he talked about like the 7 red flags to look out for, and in particular, obviously track record, right? And also the team, right? It's not just one solo band. It's the entire, it's the team that's going to help to execute the business plan. But also, I think it was a unique stat. He talked about the percentage of repeat investors, right? So you want to make that a healthy percentage. Like, what of the deals that you've done, let's say you've done 10 deals, of those, how many on the first client that came in with you on the first one, are they still with you? How many others, did they go with the second one, the third? Have they been 100%? They go on to you with every deal. That's a really good stat, right? Is it 70%? Is it 50%? Is it only 20%, right? So
we're at 81%.
Which is amazing, which is part of why you're part of the Strategic Alliance at Capital Gains Tax Solutions, right? Because we're looking for the best operators that have a passion for commercial real estate value add and also newer construction. By the way, I toured one of the most beautiful properties that you guys have. It's Monte Rosa in Orlando. So I flew back there with the family, went to Disney World, and I said, I got to go check out what Dan's doing on the ground here. And so I came in as like a secret shopper and just, can I tour some stuff? I might be moving here with the family kind of thing. And it was wonderful. It was amazing. And that thing has only gone up with what's going on with Orlando since I think you bought it about 2 years ago or a year and a half ago. So super neat. Yeah, so 81%. So talk about that or any thoughts on that?
Yeah, I think it goes, I mean, there's so many reasons why we're at 81%. The high quality of the deals, the quality of the team that we have at passiveinvesting.com, but also the way we operate the business. And one of the things, when we talk to our investors in person at our investor relations dinner, even just on the phone via email, they're all really impressed by our communication as an operator. Not only the frequency of the communication, but the transparency of the communication. We really try to, before we put out any communication out to the investor, we really are trying to kind of get in their head to understand what are all the questions and answer those ahead of time. Now, it doesn't mean that they don't have questions they go through, as they should. They're our partners. We're the general partner, they're the limited partner. We're partners, we're equity partners in the deal. But really, doing what we can to kind of, get ahead of the game and just be really open, honest, and transparent with them.
So important, right? Which is very, very key because you can have a great operator, even a great person who negotiates deals. But if you lose that communication, which is the third arm, right? It's this couple other arms as well. It's tough to know what's actually happening, right? And so, I mean, Dan shared a story of another operator who really performed well, but the process of the communication along the way was poor or average. And even though the outcome was a really good return, they're left feeling like this wasn't a great experience, right? Mm-hmm. Like just yield is not just it. It's the relationship, it's the communication, and it's feeling like you're a part of something rather than just completely passively just saying, goodbye, like putting into the stock market and investing in Apple and not being able to, talk to anyone that really makes a difference on the investments. Is that a fair summary, Whitney?
Yeah, I mean, I don't have Tim Cook on speed dial, but I think it's not just with when you have this initial conversation, when a limited partner has an initial conversation with an operator, it's probably with somebody on the investor relations team. You not only want that point of communication to go really well, but you have to look at the entire ecosystem. Are the deal updates coming on time? Are the K1 coming out on time? Is there communication around tax season? Do they have an onboarding process for the investors? Is there an ongoing education process with the investors? So it's the whole, again, not just one point of contact, but the entire ecosystem.
I absolutely love that. That's inspiring and it's great. So is there a fourth secret, or besides just going to passiveinvestingwithwhitney.com and checking out one of her cool webinars and educational and next offering? Any thoughts on that, Whitney?
Well, there's two more that I just really want to touch on really quickly. And, the operator is the business plan, but it is up to the limited partner to double check, they own the investment. And that's sometimes part of the, the transition from investing in stocks, bonds, and mutual funds to coming to private equity investment. You're in control as the limited partner on what you invest in. And what you can control? You can control three things: the operator that you invest with, the markets you're invested in, and the deal that you're in. And so past the operator, the limited partner, you should, take care to understand how to, at least at a very high level, double check the numbers for market metrics for any deal that they go into. And so is the population growing? Are jobs growing? Are jobs diversified? Is the income growing? Especially if you're looking at residential type real estate, are housing prices in the area going up? Are rents going up? When you look at the business plan of the deal and expenses, are taxes tax favorable in that area? And then, overall, I think this applies across the board. You want to have low crime, low vacancy for whatever asset you're going in. So you can double check these at a high level. I mean, obviously your operator is going to probably be pulling data from CoStar or some platform like that. You can double check this as well on the web utilizing tools like niche.com or city-data.com.
Perfect.
Yeah. And then learning how to vet the deal, which I have a
Yeah.
whole other webinar on that I would love to share with people here.
Yeah, and by the way, go to passiveinvestingwithwhitney.com to check that out. But for sake of time, we're going to shift a little bit to what I like to call this part of this show where we're talking about like the biggest frustration when it comes to capital gains tax deferral, right? And what's tough about before people meet us, is sometimes they're not sure what they're going to do. They're running out of time on a 1031. They're not sure if they can diversify into a passive deal. So I'm just curious, Whitney, what have you found to be the biggest frustration when it comes to the 1031 exchange or exiting highly appreciated assets?
Well, I actually we were talking before we jumped on, I had 4 failed 1031s last year. And so I can speak from experience on this one. For me, it was just, kind of like, I love your words, the shotgun wedding approach. I decided to take a crack at it, and I 1031 all of my my 4 assets that I was exiting. I put them with a qualified intermediary, and then I just couldn't identify an asset that really truly made sense. And I know for me, it just I felt more comfortable because I actually had options to go into a syndication or multifamily and get higher cost segregation and accelerated depreciation. I knew about that. So I didn't really feel pressured to have to go through the 1031, but I see investors all the time make poor decisions on going into their next asset because they feel like they have to execute the 1031. The 1031, we're in a unique time right now, at least for the next until 2024. If taxes are more than likely, okay, I'm not an economist, I'm not a CPA, are at the lowest that they're going to be for quite some time. I'm going to go ahead and pay the tax bill now at this low tax rate and then step up my basis. And so I really think 1031 is an amazing tool. However, I think there's so many different options out there. I actually have a friend of mine that's exiting out of a condo right now, and he's like texting me like every 5 minutes going, please, can we get on the phone? I need to know what to do with my capital gains. And I'm like, well, when do you need to know by? And he was like, today.
Yeah, there's a lot there. So absolutely, couldn't agree with you more on the shotgun wedding, right? The 45-day engagement, 180-day marriage, and oftentimes that it can be a bit daunting. We also have a minimum $1 million net proceeds, $1 million gain, and we do that because otherwise, you might be able to just do some cost seg passively, or pay the tax, do some cost seg to offset some of that. Just depends on the size of the deal. And then some deals don't even qualify for a 1031. Like we just did a cryptocurrency sale, a $5 million exit of over about a $49 million gain. And so she bought Bitcoin for 50,000 and it went to 50 million. And so for her, she wanted to exit, defer that tax, and invest it into a business venture that could get some depreciation. So we talk about this idea of it's no longer about cash flow, it's about tax flow. And by the way, it's always about cash flow, but it's increasingly more about tax flow because how you exit matters, because it's 30 to 50% capital gains tax depreciation recapture. And if you're not investing in things that give you like cost segregation, accelerated depreciation, and or cash flow that can be offset by that, then you're putting yourself in a disadvantaged tax flow situation. Even though you might have some good cash flow or good high income, Robert Kiyosaki says it best when we want to be on the right side of the quadrant, which is a business and an investor, because you get the best tax treatments rather than a W-2 or self-employed. And when you understand how to unlock that, and by the way, we have a cool thing called a Deferred Sales Trust, where you never have to worry about a 1031 exchange ever again. You can defer capital gains tax on crypto, businesses, real estate, save a failed 1031 exchange. So you can invest when it makes sense for you. All tax deferred. You can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. But Whitney, any thoughts on anything I just said there, or any feedback?
No, I'm just recently have learned about the Deferred Sales Trust, and I'm like, oh man. One, I aspire one day to utilize the Deferred Sales Trust. Two, I think it's just an amazing tool to not only defer taxes, but be able to navigate, I have the sale of a business and maybe I want to go into real estate, or maybe I want to diversify and do a couple of different things. So I think I think it's an amazing tool that people should really take a look at and really consider as their wealth building strategy.
Fantastic. Thanks for that plug, Whitney. Are you ready for the lightning round?
Sure, let's do it.
All right, knowing what you know now, if you could go back to your 25-year-old self or your 20-year-old self, we can go even earlier. What's the one golden nugget you'd make sure to tell yourself to do?
Invest in more cash flowing real estate passively earlier.
Great. Number 2, what's your favorite book that you've recommended or gifted the most in the past year?
The One Thing by Jay Papasan and Gary Keller.
Beautiful. Next question, what's your favorite leadership quote or theme that you strive to live by?
Ooh, this is more of a life quote, but a friend of mine says, life is an amusement park and I want to ride all the rides.
Cool. I like that. Question number 4, what are you most curious about right now?
Oh gosh. Everything. This is going to sound a little funny, a little departure from commercial real estate, but personally, we are trying to buy assets that we can personally utilize and, create a business around. So, most people naturally think of short-term rentals, but we are starting a camper van fleet.
That sounds fun. And you're out of Denver or Boulder, Colorado, right? So there's probably a lot of opportunities to use that business.
Yes.
Cool. Second to last question. Is this number 1, or what do you think about cryptocurrency? I guess is kind of the thought. You have some? Okay, cool.
I have some.
Good. All right. And so just getting started, long-term holder, what, any thoughts on that?
For me, I'm still kind of wrapping my head around like how cryptocurrency is going to end up playing out in the world. But I think, it's better to get in early and take that kind of asymmetric bet. And I'm just going to hold it for right now.
Awesome. Last question. After all the people you've helped with investing and also in your previous working career in the medical field and in unlocking educational ways for people to create and preserve more wealth with real estate, how do you stay centered? What's the one habit that helps you stay centered in your values and stay encouraged to charge forward to reach new heights?
I imagine people are probably looking for some sort of like really pearly golden nugget, but I think for me, it's putting on my oxygen mask first and figuring out what do I need for my own personal health and my body right now and my mind. And so I have a very strong morning routine, and that just sets the day for everything that I do. And then on a monthly basis, we do like a little family dream retreat. And so we're really not only connecting as a family, but really diving in to figure out, set our goals and intentions for the next year, but then breaking that down into 90-day targets and monthly targets.
Phenomenal. Whitney, I want to thank you for being on the show. I want to thank you for sharing so much with us today. I'm more inspired. I'm better for it. I want to thank you for using the gifts of making something complex very simple. And I want to encourage you to keep doing that to help people create and preserve more wealth in commercial real estate. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to connect with you?
Yeah, you can join me at passiveinvestingwithwhitney.com. And I've got some free goodies for everybody there, as well as you can block some time on my calendar if you'd like to do so.
Phenomenal. Thanks, Whitney, for being here. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions Podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using Deferred Sales Trust is a proven tax deferral strategy. Maybe the best way for you to create and preserve more wealth, or getting someone like with Whitney to invest passively and to grow your educational muscles with her, right? So you can create and preserve more wealth. If you're looking to defer capital gains tax of any kind, cryptocurrency, business, real estate, I want to invite you to our free mastermind that happens every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern. We call it the Crypto Deferred Sales Trust Mastermind, but it applies to business, sales, real estate, 1031 exchanges, where me and some friends and some new people that are learning about it, some strategic alliances, are geeking out about tax, about real estate, about investing. And we're very passionate about exiting tax deferred using the Deferred Sales Trust. So you can join that by going to capitalgainstaxsolutions.com. As well, we appreciate all of you out there at Expert Secrets YouTube channel that are listening or watching us on or hearing us on iTunes. Please rate, review, subscribe. Please hit that like button on whatever you're watching this. That helps to get the message out. And we will talk to everybody